All right, ready to jump into some interesting numbers today? We're taking a deep dive into Relaxo Footwears Ltd. and their performance last quarter, Q3 of fiscal year 2025.
Yeah, we've got quite a bit of material to work with here. Their official statements, that presentation they put out for investors, even a press release, so we should be able to get a pretty clear picture.
The thing that really stands out to me is, how Relaxo is handling this tough market. Reading through their reports, it seems like they're making some strategic shifts, trying to find that balance between dealing with the current situation and their plans for the future.
That's exactly it. It's about understanding what's behind the numbers, not just looking at them at face value.
So let's start with a quick snapshot of Relaxo's Q3. Revenue dropped 6.43% compared to last year, coming in at 666.90 crore. And their profit after tax also shrunk 14.42% down to 33.01 crore.
Yeah, so at first glance, those numbers might seem a little worrisome, but we have to remember what's going on in the market overall. Relaxo even pointed to a weak demand environment in the reports. It's not just them, the whole footwear sector is feeling the pressure.
So there are definitely external forces at play. But here's something I found interesting. Their total sales volume went down, but the average price they got for each pair actually went up.
You picked up on that too. That's a really key detail. It tells me they might be selling less, but they're getting more for what they are selling.
So is this revenue dip just because of the market? Or is Relaxo doing something strategic here?
Well, if you look at what their chairman said, there are some hints there. He talks about how they're completely changing their distribution system, especially with this new app they launched, Relaxo Parivar.
Relaxo Parivar, huh? What's that all about?
Basically, it's like an exclusive network. Think of it as a direct line connecting Relaxo to their distributors and all their retailers. It's a big move, probably so they can cut out some of the middlemen and have tighter control over their supply chain.
So it's about efficiency and having more direct connections, but is there a risk of pushback from their partners with this kind of change?
That's a good point. Anytime you change the way things have always been done, there's bound to be some friction. The big question is, can Relaxo manage this transition well and make sure everybody is on board?
Seems like a calculated risk. Maybe they're willing to take a hit on sales now if it means they'll have a stronger, more responsive network later on. Makes you wonder, how is all of this affecting their profitability and margins?
Let's take a look at those. So their EBITDA margin, which basically tells us how much profit they're making on each sale before all the other expenses like interest and taxes, is actually up a little bit year over year. It went from 12.23% to 12.5%.
Okay, so they are making a slightly bigger profit on each rupee of sales. What about their PEAT margin, though, the profit after tax?
That one's down a bit, going from 5.41% to 4.95%. It's something we see a lot when things get rough in the market. Companies try to keep their profit levels up even if they're selling less, but it's tricky.
I'm curious, what are they doing specifically to keep costs down? Are they just putting the squeeze on their suppliers, or are they doing things internally too?
Seems like they're doing both. In their statements, they talk about focusing on cutting costs in their factories, which probably means making production more efficient,
Yeah.
maybe even renegotiating contracts. And yeah, I'm sure they're working with suppliers to get the best deals too.
So tightening the belt all around makes sense given the situation. But what about the bigger picture? What are they doing strategically besides just cost cutting?
Well, I thought it was really interesting that even with all this talk of a difficult market and needing to watch their spending, the chairman mentioned making some curated investments for the future.
Created investments. What does that even mean? What are they putting their money into during these times?
Well, their presentation to investors gave some clues. It looks like they're really focusing on building up their online presence. They're moving toward this thing they're calling a brand as a seller model,
Right.
which basically means they want to have more direct control over their online sales.
So they're not going to rely only on those big online marketplaces. They're building their own e-commerce operation.
It's definitely a trend we're seeing in a lot of industries. Companies want more control over how their brand is presented online, who their customers are, and they want all that data. It takes a lot of investment to do that, but in the long term, it can really pay off.
So it's a big bet on online growth, even though their traditional stores are facing challenges. Is that a good move, or are they putting too much faith in just one thing?
It's a big gamble, that's for sure. Online sales are growing like crazy, but there's also a ton of competition. Relaxo will need to execute this really well to make sure it works and create an experience people enjoy. They need to stand out.
And what about their existing network of distributors and stores? Are they being left behind in this digital push?
Yeah, that's an important question and one we'll get into more later. But before we do that, I wanted to mention something else that really stood out to me. How much manufacturing Relaxo does.
Oh, yeah, that was impressive. 9 factories across India, making over 1 million pairs of shoes a day. It's hard to even imagine how big that is.
It shows how committed they are to being vertically integrated. They control every part of the process, from design and getting materials all the way to production and getting their products out there. That gives them a lot of power over quality, cost, and speed.
And that efficient manufacturing is really important when consumers are watching their spending so closely. They need to keep costs down if they want to stay competitive.
Definitely. It's not just about cost, though. It's about quality, too. They're putting a lot of emphasis on making sure their products are good, which builds trust with customers. You can't cut corners on that.
And speaking of getting their products out there, their distribution network is huge. Over 70,000 stores that sell multiple brands, around 650 distributors, more than 400 stores that just sell their brand. And on top of all that, they're exporting to something like 34 countries.
It's massive. Really shows how dominant they are in the Indian market. Oh, and remember that detail about their office in Dubai? They're thinking globally, too, not just locally.
It all points to a company that's ambitious and strategic. But what about the people behind it all? What about their leadership team? Who's steering this ship?
They have a really interesting leadership team, a good mix of experience and diverse backgrounds. Their chairman has been in the footwear industry for almost 50 years. Talk about knowing the business.
Yeah.
And their independent directors bring expertise in finance and marketing, which is so important right now.
So they've got some steady hands at the wheel. I'm also interested in how committed they are to sustainability and doing good. Are they just focused on profits, or are they trying to have a positive impact too?
You know, that's a great question. It's something that people often overlook when they're looking at financial performance, but it looks like Relaxo really is invested in those things. They're working on water conservation, doing healthcare initiatives, even educational programs.
That's pretty impressive. It shows they're thinking beyond just the bottom line and taking responsibility for the communities where they work.
And it's a smart business move, too. Customers, especially younger ones, care about what companies stand for and whether they're doing good in the world. They're more likely to support those kinds of businesses.
So it's good for everyone. Okay, we've covered a lot in this first part of our deep dive. We looked at their financials, talked about that revenue dip and how they're cutting costs, and we also looked at their strategic moves, the changes to their distribution, and their big bet on online growth.
Yeah, and we got a peek at their manufacturing power, that huge distribution network, and their commitment to sustainability. But there's still a lot more to explore.
Definitely, this is just the beginning. So stick with us as we continue our deep dive into Relaxo Footwears Ltd. In part 2, where we'll dig even deeper into their financials and break down those strategic choices.
We'll be back in a bit to see if Relaxo's plans will lead them to success or if there are hidden challenges ahead.
Welcome back to our deep dive into Relaxo Footwears Ltd.
We're picking up where we left off, digging deeper into their Q3 FY25 performance.
We've already talked about their impressive manufacturing and distribution network, but now I'm curious about some specifics in the financials.
Yeah, let's zoom in on those numbers. What caught your eye?
Well, their revenue from operations in Q3 FY25 was 666.90 crore. That's a dip of 6.43% compared to the same period last year. But here's what I found interesting. Their cost of materials, including packaging, actually went down too.
Now that is interesting. So even with lower revenue, they're spending less on the stuff they need to make their products.
Right, and that makes me think their cost optimization strategies are starting to work.
Could be a sign of things to come. And there's another piece that supports that idea. There are changes in inventories, that's finished goods, stock and trade, and work in progress.
Yeah.
All that decreased too.
Okay, so basically they're getting better at managing their inventory, making sure they're not stuck with piles of unsold products.
Yeah, exactly. That's a smart move. When demand is uncertain, it gives them more financial flexibility.
Absolutely, but there's one thing that's a little puzzling to me. Their employee benefits expenses stayed pretty much the same year over year. 96.000 crore in Q3 FY25 compared to 96.04 crore in Q3 FY24.
That is interesting. It's a bit hard to say what that means without knowing more. It could be they're holding back on raises or hiring, or maybe it just means their staffing levels are stable.
True. Anyway, shifting gears a bit, I was really impressed with how they're handling their debt. In their investor presentation, they showed a big decrease in net debt from FY24 to the first half of FY25.
Oh, yeah, I remember that. They went from a net debt of 123 crore in FY24 to a mere year for just 6 months later in the first half of FY25.
It's almost like they wiped out their debt entirely. It seems like they're being really careful with their finances, which makes sense in these uncertain times.
No doubt about it. It gives them more room to maneuver if things get rough, and more importantly, frees up resources for those curated investments we talked about before.
That's a good point. It lets them chase those opportunities without taking on too much risk. Makes you wonder what those investments might be, besides their online push, maybe new products, expanding into different markets.
Those are definitely possibilities, and there's some hints in their presentation. They talk about a focus on product innovation, coming up with new designs and features that customers want.
So they're not just sitting back and waiting, they're actively trying to stay ahead of the game.
Exactly. And they're also talking about getting stronger in both domestic and international markets. Remember those export numbers we discussed? It seems they're not content with just being a big player in India.
It's ambitious, but they've shown they're not afraid to take on challenges.
Right, and with their strong financial position, they've got the means to chase that growth.
It really seems like they're not just reacting to the market, but actively shaping their own future.
Exactly. It's like they're playing the long game, making strategic moves to ensure their continued success.
It's inspiring to see a company taking charge like that, but I also can't help but wonder, are there potential problems? What challenges could they face?
Now that's a key question. It's something we'll explore in the final part of our deep dive.
Okay, looking forward to it. We'll examine the risks, the competition, and all those broader economic factors that could affect them.
Because every story has multiple sides, and we need to understand all of them to really get Relaxo's situation.
This is getting interesting. Can't wait to hear what else you've uncovered.
Well, stay tuned because in the final part of our deep dive, we'll uncover the potential challenges ahead for Relaxo and whether their strategies will actually pay off in the long run.
All right, welcome back to our final look at Relaxo Footwears Ltd. And their Q3 FY25 performance.
We've been through quite a lot already, haven't we? Their revenue dips and how they're trying to cut costs, all those ambitious plans they have.
Yeah, but as with any journey, there are bound to be some bumps in the road.
Of course, no company sails through perfectly smooth waters, and Relaxo is no different.
So let's talk about those potential bumps, those headwinds Relaxo might face. What could throw them off course?
Well, that weak demand environment we keep talking about, that's a big one. It's like a current working against them.
Right, it's impacting the whole footwear market, not just Relaxo, not something they can really control.
Exactly. Even with all their efforts to be more efficient and keep costs down, they're still exposed to those bigger economic forces.
So it's like pressure from both outside and inside.
And don't forget about those changes they're making to their distribution system, that whole Relaxo Paravar app thing.
Oh, yeah, right. Their plan to streamline everything and have more control. But that's causing some short-term pain in terms of sales volume.
It's a big gamble. They're hoping this digital transformation will pay off, but there's no guarantee.
What if those retailers and distributors don't like the change? What if they're happy with the old way of doing things? And what if the app itself doesn't work as well as they think it will?
All valid concerns. Change is never easy, and Relaxo needs to be very careful how they manage all of this.
It's a balancing act, isn't it? Trying to be innovative, but also keeping things running smoothly.
Definitely. And then, of course, there's always the competition. The footwear market is crowded with brands from all over the place fighting for customers.
Relaxo might be the top dog in India, but they can't just sit back and relax.
No way. New brands are popping up all the time, trends are changing constantly, and customers have so many choices.
So they have to stay on top of things, keep innovating, and make sure they're offering what people want.
And that's where their focus on being online is a smart move. But that's just one part of it. They need to keep their finger on the pulse of what's happening, what consumers are looking for.
I think rising costs are another potential problem for them. Inflation is a global issue. Everything is costing more, from raw materials to shipping.
Yeah, even with their efforts to cut costs, these external pressures could really squeeze their margins.
It's a tough balancing act, keeping prices competitive while also making sure they're profitable.
It's a challenge many businesses are facing, especially right now.
And we can't forget about the regulatory environment either. Government policies, import-export rules, labor laws, those can all change and have a big impact on how they operate.
It's a lot to navigate. Relaxo needs to be able to adapt and respond quickly.
Sounds like there are a lot of potential storms out there. But let's not forget about the positive side, the opportunities for Relaxo. What are some of their bright spots?
Well, the good news is, even with all the challenges, the Indian footwear market is still expected to grow. People have more disposable income, the population is young, and more people are moving to cities. All good signs for Relaxo.
And being the market leader puts them in a good position to take advantage of that.
For sure. Their big distribution network, their well-known brand, and their efficient manufacturing are all major pluses.
And their strategic investments in e-commerce and their online presence that could really help them reach more customers.
Right. Remember, their brand is a seller model. It lets them tell their own story and build better relationships with consumers.
And their focus on developing new products, new designs, features, and technologies, it's going to be crucial for staying ahead of the competition.
They're even trying out some online-only products, creating a sense of exclusivity and tapping into that growing demand for something different and unique.
And we can't overlook their commitment to sustainability either. That's something more and more customers care about, wanting to support businesses that are doing good.
It's a way for them to set themselves apart, build loyalty, and attract those new shoppers who are thinking about these things.
So it looks like Relaxo is navigating a mix of calm and turbulent waters. What are your thoughts on their overall path? Where do you see them going from here?
It's a really interesting story of a company adapting and evolving. The footwear market is always changing, and Relaxo is trying to stay one step ahead.
They're making bold moves, taking calculated risks, and investing in their future.
The question is, will it be enough? Will those strategic bets pay off in the long run? Will they overcome those challenges and come out stronger on the other side?
We'll have to wait and see. But one thing is for sure, Relaxo is a company to keep an eye on. Their story is far from over.
They're not just going with the flow. They're moving forward with a clear vision and a strong determination to succeed.
This deep dive has been a fascinating journey. Thanks for guiding us through these sometimes choppy waters.
You're very welcome. Always remember, the business world is constantly changing, and we need to keep learning and adapting to keep up.
So true. Keep exploring, keep learning, and keep diving deep. Until next time.